Welcome to this week's live ASX strategy session. Great to have you with me. We've got a fair bit of interesting things to go through today. A bit of movement in the ASX 200 and in some of those key commodities. Bit to talk about in the stock section too. So let's first of all, everything today general commentary only. Doesn't take your personal situation into account. So having gone through and said all that, let's get into our first chart for the week. So we'll start off with the ASX 200, and the ASX 200 continues to have this coiling pattern which has been going on for the last couple of months, and the price action continues to compress as we move further along through this setup. It's really interesting when you look at this from a weekly chart. We're going to do that in a moment. I'll jump to a weekly in a moment. It's interesting to step back and look at the bigger picture view of how all this price action shapes up. But before we do that, just while we're on this daily chart, it's really this week has really just been a gradual decline back to the middle of the range. Support comes in at around 7,720, where this blue horizontal line is. You can see this has been a technically active region over the last couple of months, and also coincides with these moving averages. So I've got the 50-day and the 100-day moving averages on the chart. So we've got this zone of support where the market currently is placed. I think the positive to take from this is that the dips continue to find support, and there's been this interest in buying the pullbacks each time the market has come back to the moving averages, and that's really been occurring since the market broke higher back in November last year. So we'll see whether that continues to be the case as we move through the next few weeks. But I think from a near-term perspective, the ASX 200, it's very much in a holding pattern. The key immediate feature on this chart is this contracting range, which I was mentioning a moment ago, and it's very much a waiting game until we get a breakout one way or the other. And these ranges they can just drag on. It's just how they go. The consolidation itself probably isn't any great surprise. We've been speaking about the possibility of a multi-month consolidation since around mid-April, when the price started to break below the 50-day moving average. And consolidations, they're just part of the cycle. Like, we would like the market just to keep rallying in a nice steady advance, but it just doesn't work like that. Consolidations are all part of it, and they typically follow those periods of strong trending prices, like we had from the October low. We had the strong trending period. Now we're getting to consolidation. They just take time to work through, and always got to keep that in mind, that time is the essence with these things. We've got to let them work through. Now let's jump over to a weekly chart. I just want to have a quick look and quick talk about that. And I'm also going to switch over to the all ordinaries rather than the ASX 200, simply because the ASX 200 doesn't have the data going back as far as the all ordinaries. But the shape of the charts looks very, very much the same. And it's just interesting compressing this a bit, get some more data. This goes all the way back to 1980. And you can see all the points of interest. There's the 1987 crash in there. Then we had the 90s recession. Move along a bit. There's the September 11 terror attacks, and then we've got the aftermath of the dot-com bubble. We've got the mining boom. There's the GFC, and along the way we've got this myriad of panics and mini crises which nobody remembers anymore. There's COVID in there, and here we are now. So what I think is interesting looking at here, and I think one like I do most of my analysis on the daily charts, but I think stepping back and looking at things from a wider view, it just helps us see some of the features that we might miss when we're just looking at a daily chart alone. When we're up close and we're looking at what's happened over the last few weeks or couple of months, you can kind of miss things things don't stand out as well when you look at on a weekly. I guess you could say, look, it's a bit like going up in a hot air balloon. You can stand on the oval and you can look around at your surroundings, get a bit of altitude, and you start to get a new perspective of things. So with this chart here, just really focusing from the COVID low onwards, and you really do get a nice view of this sideways period which the market went through for around, it was coming up to 3 years. It was from August 21 through to October 23, so about 2 years, about 2 years of sideways price action. And we can just map out this range by putting in some trend lines. You can see that it was one of those. It was a contracting range, kind of like what we have at the moment, a contracting range, but on a smaller time frame. And you get that contracting range going through there. So as I was saying earlier, that you get these big runs in markets, and big trends are often followed by those lengthy consolidations, which is what the ASX 200 and the All Ordinaries went to. Now, the interesting thing, when a market breaks out of a range, it often starts off a new trending phase, and that those trending phases can last for quite a while. What happens after the breakout, though, and this doesn't happen all the time, but it does happen quite frequently, where you get a breakout and then you'll get a pause and a pullback towards where the breakout began from. That's what we've been seeing with the ASX 200 and the All Ordinaries over the last couple of months. We've had this pause and this pullback towards where prices broke out from back in December. Now, what could happen with this? This could still take a bit longer to play out. So, for instance, say you couldn't rule out that the ASX 200. Let me just get that back. The ASX 200 doesn't maybe we do see this continue to pull back to the 50-week moving average. So, as this is a weekly chart, it's a 50-week and a 100-week moving average. Normally, we're talking about 50 days and 100 days, but it's a weekly chart, so it's periods. It's a 50-week. So we could see this continue to drift back to the 50-week over the next month or two, or some time frame, and then from there, maybe it's a case that the rally then gets back underway again. When you look at it on a weekly chart, that doesn't take much time at all. But of course, we're going through on a daily chart, so everything just feels like it's taking longer. And so it's just interesting to look at these weeklies and understand how the pathway forward could be. Of course, something entirely different could happen and the market could fall. But at this point, that's not how the price action is appearing. But look, whether there's more consolidation or prices break higher in the near term, I think this overall structure that we have on the when we look at the weekly, I think the overall structure is bullish. Nothing here suggests that the market is currently up near a lasting high, a high that's going to endure and be there for ages. Nothing here suggests that this is a lasting peak. Now, the interesting thing is with all-time highs, people often worry when a market gets to an all-time high, that the number one worry tends to be that the market must be close to a top, an important top which will last a long time. But when you look at the weekly chart, and this is the other interesting thing with looking at a weekly chart, when you look at a weekly chart and you look at the all-time highs, and we can go all the way back into the 80s, look at all-time highs. All-time highs tend to lead to more all-time highs. Gets to a point where that stops and there's a pullback or a correction, or in this case, a crash in 87. But all-time highs, and this isn't day in, day out either. There's going to be weekly pauses and stuff. But overall, new all-time highs tend to lead to more all-time highs. and then the market made new all-time highs again in 96, and we had another general run where they continued, and they kicked off again back in the early 2000s, another series of new all-time highs, and the series continues. Doesn't always work out that way. There's the COVID peak. Market had just made a new all-time high, and then it was a crash. So doesn't always play out, but all-time highs tend to lead to more, not the other way around. So that's why I think at current levels we should be generally optimistic that this period plays out in a positive way, and that barring further consolidation, that I think that on balance of probability that the trend remains upwards and new highs come potentially later in the year. So my approach through this period, it's really all been about remaining long. This is what we talk about each week. It's been about remaining long, staying with your profitable positions, letting profits run, using those wide trailing stops to try and see off periods of consolidation. Like just coming back to our daily chart, like markets are going to consolidate. They're going to whip around, and you need to be able to see those off if you want to stay with longer trends, so with medium-term trends. So hence those wide trailing stops to try and do that, to try and hang into those profitable positions. I think the positive with this, going back to our ASX 200, I think one of the great things about a range is we get some clear levels to watch, particularly on the top side. On the bottom side, I've still, as I was saying on that weekly, I wouldn't discount that this could still pull back further. But on the top side, I think this is pretty clear levels. We've got the highs from April and May to monitor, and I think a breakout above those would then signal a new round of potential all-time highs. So these are the points to watch, around 7,900 thereabouts. But as always, manage risk. We've got to manage risk. I always prepare to be wrong. And it's a funny thing. I say that and people think, why are you preparing to be wrong? Shouldn't you be optimistic that you're going to be right? And we want to approach markets with the optimism that we can make money. Otherwise, we wouldn't be in it. But we've also got to prepare to be wrong. And we've got to be prepared to be wrong often, because it will work out like that. But the thing is, you can set a stop loss if you're wrong. And if a stock's working, fine, you let it keep working. But if you're wrong, prepare to be a little bit wrong early rather than risk being a lot wrong later. So that's why I prepare to be wrong. Prepare to be wrong fairly early in the piece and not lose too much when it doesn't work out. And it's not a bad thing when it doesn't work out. It's just part of the process. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks to the video. Just tells YouTube you're watching, and YouTube shows other people. So that always helps a lot. Now, we're going to move on to the small orders in a moment. I got the commodities, some stocks to talk about, but of course that wraps up the free section. So if you're not a Strategy Session member, I've got a link below. Just click that, come on in, costs you next to nothing, and hopefully you'll get a lot of value and some ideas which otherwise you may not have thought of. So, okay, let's go over and look at the small orders.